Welcome to this explainer. If you look at the financial news lately, it's just a wall of flashy AI headlines. Everyone is staring right at the shiny new processors. But since we're focused on how to actually evaluate AI stocks, we know we need to look way beyond the obvious. The real question isn't just about which chip is the fastest. It's about how to uncover and evaluate the massive, hidden infrastructure operating just beneath the surface. Where is the real money actually flowing when the hype fades? Well, let's step behind the curtain and find out.
Okay, let's dive right into this. $96.2 billion. Let's just pause for a second and truly absorb that number. That is roughly the GDP of an entire small country, generated in just 3 months. It's staggering. It's one of those jaw-dropping figures that almost sounds made up. But this is NVIDIA's actual quarterly revenue. It's more than double what they made in the exact same quarter last year. And get this, their data center business alone accounted for $89 billion of that total. We are talking about an absolute explosion of growth here.
And clearly this momentum, it is absolutely not slowing down. $108 billion. That's their revenue forecast for the very next quarter. It completely answers one of Wall Street's biggest questions right now, proving that this AI infrastructure build-out is still running at absolute full speed. But here's the twist. This incredible earnings report actually reveals something much, much bigger than just one company. It reveals a massive, rapidly expanding AI money machine. If we want to properly evaluate the stocks in this space, we have to follow exactly where that money is flowing next.
Think of NVIDIA as the ultimate leading indicator for a huge downstream economy. Because every time they sell more AI computing power, an entire ecosystem of companies has to step up to build everything surrounding those chips. To systematically evaluate these picks and shovels companies, we really need a mental checklist. We can break this whole ecosystem down into 3 main areas. First, the core layer, which deals with memory and manufacturing. Then, the connectors, handling the vast data center networks. And finally, the physical layer, which battles the harsh realities of power and cooling.
It's all about the multiplier effect. Basically, $1 spent on AI computing creates a massive shockwave across the entire supply chain. So how do we actually build this AI factory? Step 1, you've got your processors and memory. But obviously, they can't just operate in a vacuum. Step 2, you absolutely have to connect them with advanced networking and optics so they can actually share data. And then step 3, you have to power and cool these incredibly demanding, red-hot machines. Let's peel the onion a bit and look closer at that first step.
You see, AI systems don't just need powerful GPUs. They require enormous amounts of high-bandwidth memory, or HBM for short. You can think of it like a massive multi-lane superhighway built directly next to the processor, so all that data can travel at lightning speed without any traffic jams. And as these AI models get bigger and bigger, the amount of memory they need just skyrockets. So this should prompt some critical second-order thinking for us as we evaluate the market. If NVIDIA is selling $89 billion worth of data center GPUs, who actually has to manufacture all the highly specialized memory that goes with them?
Well, that brings us perfectly to layer 1, the core supply chain. You've got companies like SK Hynix, which, by the way, has a multi-year partnership with NVIDIA, alongside Micron and Samsung. They are positioned right at the heart of this infrastructure story. When you're evaluating these companies, you have to look for the bottlenecks. When memory supply gets tight, it creates a massive bottleneck. And if a company supplies that bottleneck, suddenly they have immense pricing power. Now sure, the memory business is historically pretty cyclical, but AI is creating a structural demand driver that can make things very, very different this time around. Oh, and of course, we absolutely cannot forget TSMC. Because NVIDIA designs the processors, but TSMC does the incredibly complex physical manufacturing. As we move toward future next-generation architectures, TSMC's cutting-edge packaging and huge production capacity become an absolutely essential foundation for the entire industry.
And this brilliantly illustrates our next major point. Thousands of state-of-the-art chips are utterly, completely useless if they can't talk to each other. The AI infrastructure race is no longer simply about who has the single fastest chip on the market. It is equally about who can connect thousands, or honestly, even millions, of these computing units together efficiently.
Which takes us right into layer 2, the connectors. This is a crucial part of the AI story that a lot of everyday investors tend to totally overlook. You have companies like Broadcom, who are building a massive business around custom silicon and high-speed networking for the hyperscalers. Then you have Arista Networks, providing the vital data center infrastructure that connects all those GPUs, CPUs, and huge storage systems. Because the AI model itself doesn't really care which server holds the information. It just needs it to arrive instantly. Plus, moving massive amounts of data electrically over copper wires generates way too much heat and resistance at this scale.
That's where optical networking comes in. They are literally using lasers to beam data across the room. It creates a massive, second-order revenue stream for these specialized tech companies.
But the physical reality of all this intense computing power introduces a totally different hurdle. The AI revolution is quietly becoming an energy and cooling revolution. These advanced AI processors consume absolutely enormous amounts of electricity, and they run so exceptionally hot that your traditional air conditioning in a data center is practically useless against them.
So the crucial takeaway here is you don't actually need to manufacture an AI chip to be a huge winner in this spending boom. Just look at Layer 3, powering the machine. Every single new AI data center out there needs high-density liquid cooling pipes and heavy-duty backup infrastructure, like the systems provided by companies such as Vertiv. When evaluating AI infrastructure stocks, always remember that selling the picks, the shovels, and literally the electricity to run them is a massive, hidden economic driver, and it's one that completely outlasts the initial hype.
We are experiencing such a fascinating evolution in AI investment right now. For a while, we've been squarely living in stage 1, just obsessing over who has the absolute best AI chip. Then comes stage 2, asking who can actually build all the infrastructure. But as we approach stage 3, the evaluation metric changes drastically. Now we face the brutal economic reality of who actually makes money from all this infrastructure. Because make no mistake, the spending here is enormous, and eventually the market is going to demand actual, tangible returns on those investments.
We can call this the ROI reality check. To figure out who actually thrived, you need to use this as your ultimate stock evaluation filter. Yes, companies are pouring billions into these facilities, but simply being a part of the AI ecosystem, that doesn't guarantee a financial win unless true economic value is being generated. You have to ask the hard questions. Who gains structural pricing power because they control a vital bottleneck? Conversely, who's about to see their profit margins just completely crushed by intense cyclical competition? And finally, who successfully transforms into an essential, irreplaceable infrastructure provider that the entire industry relies on?
Which leaves us with this final, bold question to ponder. When all this incredible infrastructure is finally built, who actually captures the economic value? As we've seen today, the biggest opportunity isn't always standing right at the front of the line. Very often, it's the companies quietly supplying those picks and shovels that collect from everyone else. So, take this framework, look underneath the flashing lights of the newest AI chips, and start evaluating these infrastructure stocks like a true insider. Thank you so much for joining me on this explainer. Keep asking those great questions and keep exploring.